Welcome to our YouTube recording session and live trading session. I hope you guys learned a lot today. You guys can just verify if you can hear me and see me. That would be great. Yes, Asim, Nolan. Anyway, you guys can verify if you can hear me and see me. That'd be great. All right. Now, this is going to go up on YouTube. I hope you guys find this very valuable. Like I said, this is a great way to learn how to trade, and it will change your life in terms of what I think, because it changed my life. I'm going to show you how to make a few trades just for agreeing to buy the stocks that you'd be buying anyways. And I'm going to show you how to make a lot of money doing so. Okay. So let's move on. I'm going to get on today's trading session. It's going to be a live trading session. So I'm going to log in. Actually, I'm already logged into my account, and we're going to go through over a few sample trades and just see what you guys think. Okay. See if the logic resonates with you the way it does with me. Okay. All right. All right. So I'm going to move over here. And here is our practice trading account. Okay, so this is an interactive broker trading account. Okay, I'm just going to close this. All right. So this is a sample account that you all get when you open your account. So if you decide to open an account with Interactive Brokers or with any other institution, they'll give you a practice trading account. Okay, and like I said, this strategy changed my life. I grew up relatively poor. Didn't have any financial literacy knowledge. I went to university and went to University of Toronto for economics, and I still came out financially literate. And the only thing that I wanted to know in university is, how do I get myself and my family to a better life? And that was never taught to me in school. I had to learn all of this after school. And what I'm about to show you guys is what changed my life. This is what allowed me to acquire my real estate portfolio and to get in a position of financial independence where, I don't have to do anything again in my life if I don't want to. That's a really good spot to be in. And if that's not the spot you're looking to get in, that's great. What about just making a few extra dollars every month and then slowly building it from there? Either way, I'm going to show you a strategy today that'll change your life, in my opinion. Okay. So I'm logged into the account here. Okay. So here we are. We're going to look at the Interactive Brokers account. Okay. So like I said, this is a sample trading account that everybody gets. Okay. If you open an account, all you have to do is go to Interactive Brokers and they will show you exactly how to do this. Okay. So I can see the app is a bit slow here. It's laggy. But just give it a second, it's going to open up, okay? Oh, there it is, okay? So now in the top right-hand corner, you'll see something called NLV. That is net liquidation value, okay? Now that represents how much money the account is going to start off with when it opens. Now you can set this to whatever amount you want. So if you have a small account, like a $50,000 account, $100,000 account, great. Set it to that, set it to whatever you like. The idea is to practice as much as possible, right, before the actual real thing begins, okay? Now there's a lot to learn, but what I'm going to show you is going to blow your mind. You can see a bunch of names here on the left-hand side. AAPL, that is a ticker symbol for Apple. And then below it, AMD, Advanced Micro Devices, Microsoft, Palantir, TQQQ, SPY, and Tesla. I want you to take particular note of QQQ and SPY, okay? Those are not individual stocks. What they are ETFs, meaning that they are a bunch of stocks all rolled up into one, okay? So if you don't want the work of looking at individual stocks and figuring out what this company is going to be worth in the future, then you can look at using those, okay? And I'm just going to give you an idea. On average, okay, I'm going to pull up the SPY here, okay, which is the S&P 500, the largest 500 companies in America, okay, in the States. And you can see here that it has been around for a long, long time. You can see how it has done over the course of 5 years. So even though this year has been really bad, over the course of 5 years, this thing has done quite well. And that's what we're looking for. We're looking for things that are going to appreciate over time, not depreciate over time, okay? That is the idea. So I'm going to go to a 5-year chart here. So that's the 5-year chart. You can see 5 years ago, it was substantially lower at about 228, and now it's about 402, even after last year's nasty decline. And that will happen from time to time, where you will have a nasty, nasty market like we did in 2022, okay? So SPY is an option that you can use, okay? You can say, you know what? I don't want to look at individual stocks. I want to just look at trading the actual index itself, okay? So I'm just giving you one choice here, okay? If you have a smaller account, this is an excellent choice to go with, okay? So now I'm going to get back out of the screen and go back to my previous screen, okay? And we are going to make a few trades, okay? So first trade we're going to make is, and the first thing we're going to look for when we make a trade, always, is, do we think that this company is going to be worth more in the future? If we cannot answer yes to that, then we have no business trading it, okay? None. We have no business being involved in this particular trade. That is the first thing we do here at Theta. Even if things get really bad, at least you have the stock to hang on to and you can wait for it to recover. However, if you invest in something that you don't understand, a meme stock that may never recover in value, and there are oftentimes that happens. Some companies never, ever recover in value, even after big declines. But you can see a lot of the bigger companies like your Apples of the world, your Microsofts, your Teslas, they have done exceptionally well over time. Okay, so we want to look at, first and foremost, the first thing we're going to look at is fundamental analysis. How well is this company doing today? And what are its future prospects? We have to confidently say to ourselves that we think it'll be worth more in the future than it is today, okay? Now, there is a risk, of course, when you're looking at individual stocks. What happens if Apple just stops making iPhones? It turns into a horrible company like BlackBerry. That could happen. So like I said, if you don't want to take that risk on, you can just look at investing in all 500 companies. But the strategy is what we really want to show you, like the SPY here. Or you could look at something like the QQQ, which is the NASDAQ 100. It's the top 100 stocks of the NASDAQ all rolled into one. I'm not trying to recommend this to you, so don't take it as a recommendation. It's simply an idea, okay? This is something that you look at if you so wish, okay? So let's start off with a trade on the QQQ. So I say to myself, you know, technology stocks really got hit last year pretty badly, but I believe in technology and I know that technology does well over a period of time, okay? And I want to invest in the technology sector. Now, this is mostly technology. You have to actually look at what it is, but you can look at the 5-year chart here and you can see, again, 5 years ago, I'll go to a 5-year chart here, that the triple Qs were at, you can see here, about, you can see it was about, what was that, about $163, okay? And today we are at 292, substantially higher. But last year we hit a peak right there, and we're not quite back at that peak yet. That peak was a little bit higher. That was about 386, okay? So we're off the peak from last year. However, we say to ourselves, we believe in the technology universe long term, and we think it'll be worth more in value in the long run. It might go down 1 year, because that happens in the stock market every so often. We had the worst year last year since 2008, and I was involved in that as well. And well, guess what happens? The stock market has always recovered and gone to an all-time high. Back then, the S&P declined by 50%, the NASDAQ declined by 50%. But if you were able to hang on to your stocks, they eventually recovered in value and went to an all-time high. Now, just as an example to show you how the market performs over a period of time, the SPY, the index we looked at previously, the ETF, excuse me, that on average has gone up almost 11% a year for the last 50 years, about 10.5% actually. It was at 10.9, but last year was a terrible year. But on average, it's gone up almost 11% a year for the last 50 years. Some years might be plus 20, and another year might be minus 10. But the point is, over a period of time, on average, we have gotten a plus almost 11% return. So remember the first thing I told you, want to look at things that we know will go up in value over time. Because what we're going to do right now is we're going to put ourselves in the worst case position where we have to buy that particular stock, okay? So now that I've explained the fundamentals to you and why they're so important, without fundamentals, we have nothing. Second thing is we look at how it'll do going forward, okay? So we've established, okay, QQQ, we've established to ourselves, we want to own this long-term. So we have a couple of choices here. Now we can see on the top left-hand corner, it says QQQ NASDAQ and it says 292.54. All right. That means currently right now it's trading at $292.52 or 48 cents. And as you can see, it keeps fluctuating, okay? And we say to ourselves, you know, a year from now, I think it'll be worth 325 or 350, or whatever number that may be. I think it'll be worth more. Either way, I know that this will go up over time, right? Same thing with, for example, housing. Same thing with housing, for example, okay? So housing over a period of time goes up, but however, it can have its bad years like it has in the last 12 months or so. So we have two choices, like I said. We can just buy this thing for 292.48, and we can just wait for it to go up to 300 to 325 and wait for it to go up value. And that's not a bad strategy if that's what you like to do. But what we like to do here at Theta, and this is in my opinion, the best strategy out there, is we like to do something called writing a naked put. So I'm going to go to the options market. Let me just go back there 1 second. You can see in the top right-hand corner, it'll say watch list, wheel, book, right under simulated trading, right underneath that yellow line, and it'll say options and spreads, okay? So now we are going to go to options and spreads, okay? So today's date is January 31st. And we say to ourselves, you know what? We don't really want to buy this thing for $292. We'll just guarantee to buy it for a lower price, and let's get paid a lot of money on that, okay? So we're going to go about a month out, okay? We're going to go to March 3rd here. That's a little over a month, okay? So 31 days here, okay? Because February is a short month. And instead of buying it for $292.54 as it's trading right now, we're going to simply agree to buy it, okay? And we're going to agree to buy it at a lower price. Let's take a look at what that lower price is now. Here is the options chain. I'm going to get back to this, okay? But what we're first going to do is we're going to scroll back out of here, and we're going to look at some of these technical analysis indicators to tell us where we want to try to buy this, okay? So I'm just going to scroll quickly across, and you can see there's a little legend that pops up. These are moving averages and Bollinger Bands. So I'm saying there's still a lot to learn, but this is a life-changing skill. So I can see we're trading right around that 200-day moving average. That's a very important indicator. You can see the 50-day moving average and the 20-day moving average is right around $279 a share. So what I'm going to do is I'm going to agree to buy this at roughly that $279 mark. We're probably going to go to $280 mark. And what we're going to do is we're going to go back into the options market, okay? Now, we're going to go to March 31st here, and we're going to agree to buy this thing for $280. As you can see here, okay, what is happening is someone is paying me, okay, in this instance. Can you guys still see my screen?
No.
Okay, I don't know what's going on. Let me just share my screen again. I apologize, guys, for technical difficulties. All right, we're back. Okay, so what I'm going to do here is I'm going to agree to buy, not actually buy, but agree to buy. So what I'm doing is I'm guaranteeing a buy price on the QQQs at 280, okay? Now, the worst thing that's going to happen to me if QQQ falls below $280 a share is I will have to buy this. However, I'm being compensated a lot of money for this. In this case, I'm being compensated $3.65 simply for agreeing to buy something that I would have bought anyways for $292 a share, $292 a share, excuse me. So what I'm doing is I am guaranteeing a buy price that is $12 below the current market price. Okay, so even if it falls below 280, I still have to buy it for 280. But I'm getting paid $3.65 a share. Now that is roughly a return of about 1.3, 1.4% for the month. Okay, and that for me is a very good trade because it's a win-win scenario for me. If this ETF happens to fall below $280 a share, great, I'll have to buy it. But I would have bought it anyways for $292. If it stays above 280, I keep the $3.65. In either scenario, though, I keep that $3.65 a share no matter what happens. So for me, this is free money. If you're going to pay me a bunch of money just to buy something I would have bought anyways, well, guess what? No problem with me. I'll sign up all day, every day for that. So I'm going to go ahead and do this trade, okay? And there we go, orders pending, and it should go through shortly, okay? So on that particular trade, I'm going to make roughly $730 US, simply agreeing to buy something that I would have bought anyways, right? And so what I did over time, guys, I took these premiums, the ones I just made, and I used that to buy cash flow positive real estate. And that's what gave me my financial freedom. And this is something that anyone can do while you're at work. It doesn't take a lot of time in the day because you already know your worst case situation. That trade that we did, we already know between now and March 3rd, the worst that's going to happen to us is we're going to have to own this thing at 280 or less. That's it. That's the worst that's going to happen to us. Provided you're not borrowing money. I should put that caveat in there. Now, if you're borrowing money, that could give you additional stress because you're using more money than you have. And the stock market gets nasty, that can be problematic. But if you're just playing with the money you have, the worst thing that will happen to you is that you will have to own it. No problem. I'm more than happy to own it because I would have bought it anyways for a higher price. Imagine you could do this on real estate, guys. If someone took a piece of property and said, hey, this house is worth $500,000. And you go to the homeowner, you say, homeowner, you know what? We both know your property is worth $500,000 because that's the market value of that property. But you say to the homeowner, you know, I don't really want to buy it for $500,000. I'll just give you a guarantee that I'll buy it off you in the next 30 days for $475,000. But I want you to pay me $10,000 for the month to do that. The homeowner would ask you to leave. They might call the police on you. It wouldn't be a pleasant conversation. You cannot do that in the real estate market. However, you can do that in the stock market, okay? And now we're gonna do another trade, okay? So we're gonna do Apple here, okay? So anyone obviously heard of Apple, right? I'm doing this presentation on Apple devices. Maybe that's not a good thing because I've had a bit of technical difficulties. But nonetheless, I say to myself, you know what? I really like Apple long-term. I think they have great products and services coming down the road. Their services business division growing, et cetera, and I justify it to myself. I say, well, here's why I want to buy Apple. And you can look all this stuff up if you're actually on this app. So I'm just gonna look at the financials. You can see how their revenue has gone up every year. Their net income has gone up every year. And I know the products and services they use because I use them myself and many people I know use them. So I'm comfortable with this. And I say to myself, you know what? In the future, I am happy to own this stock, regardless if it may get hurt in the short term because of the economy or something like that. So again, I'm going to take a look at this chart and I'm going to say to myself, where do I want to buy Apple? Now you can see Apple's trading for $143.39 currently. And I say to myself, you know what? I look at the 50-day moving average. We're below the 200-day moving average at 148. And I say to myself, you know, that 138, 139 number looks pretty attractive to me. And again, there's a lot to learn here. I'm just simply showing you the basics. And I'm going to agree to buy this for about that 139 number. I'm going to go to March 3rd again, the same date, okay? And I'm going to agree to buy it for 139. So here it is. And it looks like I'm getting paid, again, that same $3.65 a share, okay? So let's pop up, which is pretty good for me. So I'm going to hit on the top. I'm going to sell order because we always sell options. We don't buy options unless we're buying back our own options. And I'm going to do 2 contracts, which means I'm going to agree to buy 200 shares of Apple at 139. So what I'm telling the market is I'm going to guarantee the buy price of Apple for 139. I would have bought it anyways for 143 in the open market. And I want you guys to understand how powerful that is. Just for agreeing to buy some Apple shares, I'm getting paid a lot of money. And the worst thing that is going to happen to me is I'm going to have to own Apple for below its current market value, which I'm more than happy to do, okay? So I'm going to go ahead and do this trade. And you must be asking yourself, why would someone, because remember, someone is doing the opposite trade. Why would someone do this? Well, the reason they'll do that, okay, is because they are either buying themselves insurance, okay, in the sense that, let's say, for example, I have a bunch of Apple shares and I have to make sure that I get at least $139 a share. Why? Because I need that money for a down payment on a home. So I can't afford for Apple to go down to 120, let's say, or 115 or 125. I have to get at least $139 a share, okay? And since I have to get that, I'm going to go ahead and buy insurance. We are more than happy to provide that insurance because for us, it is a win-win situation, okay? Now, the other type of person that is going to look into buying these options is someone called the speculator. People who speculate on the market. They think, okay, that Apple would go down in value more than 139 and plus the 365 they had to pay for that lottery ticket. That's kind of what it is, okay? So let's say, for example, Apple goes down from 143 down to 125. Well, then they'll be able to turn that small amount of money into a large amount of money. Now, that person loses almost all the time. And that reason for that is a concept called theta. Once you sell an option, the option starts declining in value because every single day, there's less chance of that happening, right? There's every single day that Apple does not hit 139, there's less of a chance it'll do so by that March 3rd deadline. And that constantly is working in our favor, okay? So that trade went through. Okay, so we made 2 trades now. And all we've done is agreed to buy the index, QQQ, and we've agreed to buy some Apple, and we've made a lot of money doing it. Now we're going to go to Tesla, okay? Now Tesla's trading for 172. It's had a pretty rough year, actually, but let's take a look at a 5-year chart on Tesla and see how it's done. Okay, you can see 5 years ago where it was, and you say to yourself, I see more Tesla on the road every day. I think it'll be worth more in the future. You can see 5 years ago, Tesla was trading at roughly, go here, it was trading at roughly, call it $20 a share, okay? $20 a share. And now we're trading at 172, but we did hit a peak of around $400 a share. So it's down substantially from where it was. But again, we have said to ourselves that, hey, we think it'll be worth more in the future. So we're going to go back and scroll out of our screen here, and we're going to go look at the 1-year chart here. And we're going to say, well, where do I want to agree to buy Tesla? It's trading for 172. I think it'll be worth a lot more in the future. And you know what? I'm happy to look at picking this up for, let's call it $155 a share. We'll go with the lower Bollinger Band here. Okay, so we're going to look at buying this at 155 a share. So we're going to go into our options market again. And again, what we're doing is we're going to guarantee the buy price on Tesla between now and March 3rd, which is 31 days. And there's a reason we're at 31 days, guys. We typically like to go 45 days and less. And there's an actual academic reason why. It is because it's the most efficient point at which you want to sell options at, okay? So now we're going to look at picking this up for $155 a share. And here it is. It looks like I'm getting paid about $7.15 a share, $7.17 a share. And if my math is correct, that is around a 4% return for the month. 4% for the month, guys. Simply to agree to buy Tesla for a $17 discount. And if it doesn't hit that discounted price, I keep the money. If it does hit that discounted price, I get to own the stock at a discount and I keep that money. And that money is called the premium, okay? And it adds up pretty quickly. So I'm going to go ahead and do this trade. I'm going to put a market order in here, okay, which means the trade should go through faster again because this is a simulated trading account. It is not a real traded account. So now I'm going to go back out of here, okay? And I'm going to go back to my portfolio. I'll load up here, okay? So we can see we've got a bunch of trades. So now let's just say, for example, I did this last month on Tesla, and I did it at $200 a share. And I had to buy Tesla for $200 a share. And let's say I got paid, $8 a share. But now I had to buy it. Now Tesla's at 172. Now what do? Okay, well, I can just hang on and wait for it to go up in value. Or, and this is the other part of our strategy, or I can do something called a covered call. So you can make money not only when you agree to buy shares of your favorite companies at discounts, you can also make money when you agree to sell your shares for a profit or at the price that you bought it for. So again, I'm going to go back into the options market, okay? And we're going to go back to March 3rd. And this is, again, we're pretending that we bought this thing last month for 200. Okay, so it went down substantially since we bought it. But we're going to turn around and say, you know what? I'm happy to sell it for the same price I bought it for. And like I said, let's say we got paid $8 a share the first time. Now, this time, we're getting paid, it looks like $5.35 roughly, simply to sell our Tesla shares for the same price that we purchased it for last month. So not only did we collect $8 a share when we agreed to buy it, now we're collecting another $5 a share simply for agreeing to sell it for the same price that we bought it for. So we can make money even if we have to own the stock. But the key with this strategy, and why I love it so much, is because you always want to put yourself in a worst case situation where the worst thing that's going to happen to you is that you own that particular stock. That is the worst situation that should happen to you. And that, to me, is not a very bad place to be, because I would rather wait for a market to recover as opposed to lose my money. Losing money is not a good strategy long term. Waiting for the market to recover oftentimes is a valid strategy. It happens all the time. Assets go down in value. Real estate goes down in value, as we're seeing right now. Okay? For the last 20 years, everyone thought real estate can go nowhere but up. Well, that's not accurate. Same thing with the stock market. Yes, over a period of time, it has done exceptionally well. But from time to time, it can do quite poorly. Okay, last year was a prime example, but last year it performed very poorly. The worst year, like I said, since 2008. The S&P was down 20% almost, and the NASDAQ, which is represented by that QQQ mostly, was down about 33.5%. It was a pretty bad year. But again, if my worst case situation is that I own that position, I can wait for the market to recover, because every single decline that the market has ever had in history has always recovered and gone to an all-time high. And that is the key, guys, with our strategy. I can't stress that enough. So I'm going to go ahead and do this trade. And there it is. Order's been filled. I've agreed to sell some of my Tesla shares for $200 a share. And you can see, we go back to our transactions here. Okay, go to our trades. See our trades. So we've made some good trades. Some of the orders are still pending. This Tesla trade and this Apple trade are still pending. They should go through shortly. But you can see, we made a bunch of money just for agreeing to buy things that we would have bought anyways. To me, that was transformational. When I figured that out, I'm like, what? I get to buy things that I would have bought anyways at a discount, and you're going to pay me a bunch of money for it? You know, where do I sign up for this deal? So to me, guys, this is the absolute best strategy out there. I'm going to turn it over to you, Manib, see if we have any questions, and I'd be happy to answer them all.
Sure, thanks, Omar. First question is from Marlena. Is there a reason why you look at NLV?
Yeah, the net liquidation value is just what your account is worth. You know, because if your account is worth, in this situation, this is a fake account, it's worth just over $1 million. I don't want to play around with more money than I have. So I have to be careful that I'm not going to agree to buy more than $1 million of stock, Marlena. That is very, very important. You can buy a lot more stock than you have money for, but it could put you in a very, very difficult position. And that's not a position you probably want to be in.
Next
I hope
question.
that answers your question.
What if someone doesn't buy the put you're selling?
Well, Marlena, I'm not dealing with a person. I am dealing with a market. So when you saw, let me just go back out here. I'll just go here and go back to let's just go to Tesla, for example, okay? And we'll just do a simple one like the 17th of February, which is a little while away. There's something called the bid and the ask, okay? The bid and the ask. We're going to go to February 17th here, okay? And let's say Tesla's trading for 172.36 right now, and I agree to buy Tesla for 160. Okay, so I'm going to go to order here, okay, and I'm going to sell order. Now you can see at the top here, under where it says $5.70, you can see 5,906 times 560 and $5.70 times 16,883. That is the number of people who are willing to buy this option at $5.60. So there's lots of people. This is a very liquid market. That won't be a difficulty as long as there is a bid. In this situation, there's a lot of interest in that bid. There are lots of people willing to buy it at that price. So that is a market constraint, but that market constraint is not a big deal, okay? It is something that can easily be overcome in terms of, because as long as there's a bid, because Tesla's a widely traded company, you will have a lot of people looking to buy, okay? I've never in my entire 25 years of investing encountered a situation where I have not been able to find a buyer for my option, okay?
Why are you selling a put versus buying a put?
Okay, good question. So again, the concept of theta, okay? So in this situation, let's just go back and let's take a look at a trade that we did here, okay? Okay, so we did this Tesla trade, okay? Well, let's go to here. We did this here. We did this one. We just did this QQQ trade, okay? So the reason I'm selling an option as opposed to buying it, remember, QQQ is trading for $292 a share. For me to make money, if I were the buyer of that option, it would have to go below 280 plus what I paid for that option, in this case, about $3.70 a share. So it would have to go to 280 minus 370, which would be 286.30. Okay. And sorry, 276.30. And I don't think it'll go below 276.30 in the next, 31 days. The odds are heavily against me. So every single day that passes, the option becomes worth less and less and less because there's less likelihood for that event to occur. That is why we sell options and not buy options. Okay. because of the concept called theta. It's time decay of an option. It's a beautiful thing once you understand it. Once you sell an option, okay, it starts decreasing in value immediately. But the good thing is you sold it. You didn't buy it. You sold it. Okay, I know it's a difficult concept to understand, but that is exactly how it works. When you sell an option, time decay starts working in your favor. That's why we called the company Theta Trading. It literally is our secret weapon. That is how we make money in the markets, by collecting theta. As long as time passes, we make money. As far as I know, time is going to keep passing. So we're in pretty good shape there. So I hope that answers your question.
Next question. How does the option time value work? When is the best time to sell an option call or put?
Like I said, we try to go within 45 days, okay? So there's something called the time decay value of an option, and it starts decaying the fastest within 45 days or less. That's why you notice both these trades I made were, all the trades I made, were all about 31 days. That's kind of the sweet spot of where an option starts losing its most value. It loses the most value the closer it gets to the date of the actual event. In this case, we did March 3rd. So the closer and closer it gets to March 3rd, the more and more value it'll start losing. But that's good for us because, again, we sold the option. We didn't buy the option, okay? All right, I hope that answers your question.
Can you go over how you determine what expiry to pick and what strike to pick?
Yeah, so I use technical analysis. Now, technical analysis is not perfect, but that's what I use, okay? So if you look, like I said, it may seem easy, but there's a lot to learn, okay? If I go to a company here, let's just go to a widely held company. Let's go to Apple, okay? It's the biggest company in the world, publicly traded anyways. And we look at this graph here, okay? And I know it's very difficult to understand. There's all these squiggly lines and what's going on here. Well, these squiggly lines represent technical analysis. So I can determine, and the reason it happens is because there is a lot of players in the market. There's algorithms, which are computerized trading. There are people who just day trade all day long. So for example, if a stock hits the 200-day moving average, a lot of people will start buying at that level. Or if it goes below the 200-day moving average, a lot of people will start selling it. That's one of the biggest indicators. So we use technical analysis to determine where exactly we would like to buy it. We use Bollinger Bands. Okay, now Bollinger Bands are the study of standard deviation. So like I said, there's a lot to learn in this process, but these are the type of things we use. We use technical analysis to determine where we would like to buy it. And then the next thing we use, of course, that 45 days or less in terms of what we're selling our option. And think about it. The worst thing that happens is we own Apple here. Who cares? If we think Apple's worth more in the future, great. I just got to buy Apple for a discount. And you paid me. Great. That is the spot we want to put ourselves in.
How do you determine when to buy back your put or covered call prior to expiry?
Excellent question. So as you can see here, in the far right-hand column, okay, once the screen adjusts here, you can see here, okay, in the far right-hand column, you can see unrealized P&L. When that number hits between 50 to 80%, that is when I like to buy my options back. Why? Because then I no longer have to worry about buying it at that price. So for example, let's see, a little while ago, I agreed to buy these QQQs, okay? I agreed to buy them for 260. Now the QQQs are worth more and a lot of time has passed. So I sold this option for considerably higher than I bought it for. So if I go down here, I sold the option on average. It says average price or under position. I'm gonna open and close this so you guys can see it, okay? I sold this, for $2.30 a share, okay? Now it's only trading for 40 cents a share. So what I'll do in this situation is I will go ahead and buy it back. So I'm going to go ahead and buy this back, okay? 2 contracts. I'm going to do a market order here. And I'm going to slide this into sell order, bam. And now I have bought it back. And the reason I want to do that is because I no longer have to worry about buying those shares at $260. Now that money is freed up and I can use that money for something else. That is called rotation of capital, okay? I hope that answers your question, but that number is around 50 to 80% for us, okay?
Do you keep liquid cash in your account to buy the stock in case you get assigned?
Yes, in fact, the system won't allow you to do it unless you have to have the money in your account. But like I said, you only have to have a portion of that money in your account. And that's why it can get a bit scary. You have to make sure that you have the money in your account. I don't like to play with a lot more money than I have, because if you do, you're going to leave yourself vulnerable to market fluctuations. It can get really painful if the market gets weak. But on the upside, if the markets do well, you'll have astronomical returns, or you could have astronomical returns. So if I have $10,000 in my account, I don't want to play with more than 10,000. If I have $1 million in my account, I want to play with $1 million. I don't want to play with, and the system will allow me to play with 3.3 times that roughly. So if I have, let's say, $100,000 in my account, the system will allow me to buy stock up to $333,000. But I don't want to do that because that puts me up to a lot of risk. It's kind of like buying a house with 5% down or 0% down. If that house happens to go down 20% in value, well, guess what? You're going to be in big trouble. And the same thing here. So that's why you have to have at least 1/3 in your account, but I like to have it all in my account in order to do it. Next question, Neeb.
What do you do with the premium you collect? Do you keep it in the brokerage account till you have enough for a down payment? How do you put that idle cash to use?
Yeah, you can do whatever you want with it. You could spend it on, if you like, which I would not recommend doing. You can keep saving it. You can use it to buy more stock. You can pull it out every so often. When you have enough money, you can go buy a property. So that's what I did. Every time I was started buying in Hamilton, Ontario in 2010. And what I did was every time I had a bunch of extra money, well, guess what? I went in and I bought a property. I had more money. Okay, I went and bought property. So I had a wonderful job that I was working on. This is how I got out of my job. I was at my job. I was saving money from my work. Also, at the same time, every time I had $30,000, $40,000, $50,000, I would go and buy a property. Another $50,000, I'd go buy a property. And I just kept doing it over and over and over again until I had enough properties where I didn't have to work anymore. So it all depends on what you want to do. You know, you could use it to live lifestyle. You could use it to buy properties. You can use it to buy more stock. It all depends. I use it to buy more, to buy property. But that, again, entirely depends on you. Next question, Neeb.
Do you think SPY will go down at the end of the day today? Who knows?
I have no idea. Nobody knows the answer to that one.
What we can tell you though is it will go up, it will go down, and maybe somewhere in between. I think that's the fairest answer. No one knows.
And also remember what we're looking for is long-term trends here. We don't know nobody knows what something is going to do in the short run. Nobody, not even Warren Buffett. But we have to say to ourselves, will SPY be up a year from now, 2 years from now, 3 years from now? That's the question we want to ask ourselves. You know, because remember, the worst case situation for us is we own SPY. Great. We want to make sure long-term that it has a positive, bright future.
Thanks, Omar. Next question. You can only trade this method in a margin account.
Yes, unfortunately, you have to trade this in a margin account, but that means you have to discipline yourself. The margin account will allow you to play with a lot more money than you have, but that doesn't mean you have to do that. You have to discipline yourself, okay? So to short answer, Marlena, yes, you must do this in a margin account and you must manage yourself and your risk.
Since you get assigned at any time, any day before expiry, how do you time the purchase of the stock once assigned? Is it automatic in IB?
Yeah, it's automatic. Yeah, it's automatic. You'll just get a notification that you've been assigned, XYZ stock, and there you go.
Perfect. Well, Omar, that is all the questions. I'll give it to you for any closing comments.
Yeah, so guys, I just want to point out something here. If you look under that, up at the top right hand, you can see something called Theta. Okay, right here. See it? Theta. Okay, under the NLV, under the SPX Delta, there's a number called Theta. Currently, this Theta is at $317.29. That means because of all the options that I sold, okay, all the options listed here, they are losing roughly $317 in value per day simply because time is passing. That is our superpower. Remember, we sold these options. We didn't buy them, we sold them. So We are not paying that theta, we are collecting that. So as long as time passes, in this particular scenario, I am collecting $317.28. Now, if I do another trade, let's say I'll show you another trade here. Let's just do one quickly. We'll do a quick Tesla trade, and we're going to do it right at the same price it's trading for, okay? Tesla's trading for 172. We're going to agree to buy it for 170, okay? Now, remember that number was 317, okay? So I'm going to add another option in here, and you're going to watch that number should change, okay? Oh, in fact, we can go to here, 372.5. All right. We're going to go sell order, market, and bam, hope it goes through. Now, the minute that goes through, okay, and it should hopefully go through. Remember, this is a simulated trading account. That theta number will jump up. Now it's at 315, 319. But as soon as that trade goes through, now I have one more option that is decaying in value for me. And that number should pop up to, let's say, around 350. It all depends on how much theta I'm collecting per day on that option. And you can actually check how much theta you're collecting on average on that. Okay, so I go to orders here. And, oh, there it is. Okay. I'm going to go to modify it. No. Let's see if it went through. Still hasn't gone through. So we're going to take a look at that trade, and we're going to look at it, and we're going to see what the value of that option is. So we're going to go back to stock here, Tesla. We're going to go to options and thing, and we're going to go February 17th, 172.50. Okay, order. Okay. Oh, sorry, my mistake. Let's go back. See quote. All right. So under this market data right here, see this market data here? We can see the theta is negative 0.304. That means every single day, well, today, I should say, because it'll get faster and faster. The value of this option will decline by 30 cents just because time is passing. So it's currently trading at $10.58. Now, if the stock doesn't move in value and one more day passes, well, I'm going to collect $30.40 just because one more day has passed. Because now there are less days between January 31st and February 17th. There is one less day. On February 1st, there'll be another less day. And I'll collect some more money. The value of this option continues to get eroded because time is passing. And that number is available to you to see. So that's the thing I really wanted to stress to you guys. This is like collecting theta. It was a life changer for me. I don't know where I would be without this strategy. It changed my life financially. You know, I was able to buy a house. I was able to buy enough investment properties where I didn't have to work again. And I have knowledge for the rest of my life, which nobody can take away. One day, if I don't feel like doing anything ever again, I can sit on a beach somewhere in the middle of the ocean, and I can simply agree to buy stocks I want to buy anyways, and I can collect a lot of money doing it. And that, to me, is a really, really good spot to be in. Knowledge truly is the power that you need to create wealth, and then you have to develop that knowledge through experience. Okay. Is there any final questions, Vineet?
Yep. Next question. Many stocks do not have options trading. Why is that? What would be your advice for a smaller account?
Yeah, some stocks don't. Like a penny stock, for example, won't have options only. It's generally the bigger stocks that do. But like, let's take a look at something like, let's say you're very conservative. You're like, I want TD Bank. Okay. Well, TD Bank, we go to here, Toronto. Okay. The bigger companies generally all have options. You can see TD Bank's trading at $92. And I say to myself, you know what? I'm happy to buy TD for $90. I was going to buy it anyways. And I go 45 days out this time. Okay, let's see what I'm getting paid on this. Okay, so TD is trading for 92. I'm going to agree to buy it for 90. Okay. And it looks like I'm getting paid $1.15 a share on this. Again, because I'm happy to buy TD. I've already done my homework on TD. I think it'll be worth more in the future. So I'm going to get paid $1.10. That's more than 1% for the month, or sorry, 1% for a month and a half. I'm happy to do that. So for smaller accounts, the second part of your question, what you can look at is instead of taking individual stock risk, because anything can happen to any stock, any company, what you can look at doing is you can look at buying or selling options, on, like I said, an ETF like the SPY or the QQQ or some other index that you like. That would be a bunch of stocks all rolled into one. And if I were looking at a smaller account, either I would do that, or I would concentrate on one or two stocks that I really, really like long term. So that really depends upon your risk profile.
What helps you pick the day, whether it be 30 to 45 days?
Generally speaking, the options expiration is called OPEX, is the third Friday of every month. So I try my best to stick to the third Friday of every month. If not, I'll wiggle around a bit. But that's just a personal preference. We generally, the key is we don't go past 45 days. But looking for the morning called OPEX, options expiration date. Okay.
Last question here. If you keep writing puts, you'll lose the upside if the stock moves higher. If you're keeping the cash in your account, would it not just be better to buy the stock and write covered calls? And is there a particular day of time that you do this?
Yeah, so you are correct. If the stock runs away on you, you're correct. You will only collect a premium. But over time, I found that I collect a lot in premiums, more so than the stock runs up. Like for example, that trade I just did, that was a 4% trade for a month on Tesla. Generally speaking, the market goes up on average 11% a year. I'm not probably going to collect that much. I'm not saying that Tesla won't go up that much. I think it's a position. I think the stock is, it's one of my favorites. And again, that's not meant to be investment. It's one of my favorites. Okay, it doesn't mean it's your favorite. Yes, you are correct. You will lose the upside if the stock runs away on you, but it doesn't mean you'll lose money. You're still making a lot of money. And as a long-term strategy, I have found that over time, yes, sometimes the stock runs away on me, but over time, I'm able to collect so much in premium that is more than compensates for that.
So last question I have here. I don't, Condicur, I don't understand your question. So technical analysis do not have any alternative to learn to buy call or put. If you could just elaborate on what you mean, please.
So technical analysis does not have an alternative to learn to buy, call, or put. Technical analysis is a tool that you use. And the reason you use that is because, like I said, so many other market participants use those same rules. 200-day moving average, 50-day moving average, Bollinger Bands, something called RSI. So we use really not too much advanced technical analysis. We don't want to be doing this all day long. Remember, we want to do this for 30 minutes or so a day, maybe an hour a day tops. So we look at the technical analysis to determine where we are going to enter, where we're going to agree to buy our stock. Why? Because that is what so many market participants are looking at. So it becomes a self-fulfilling prophecy. Okay.
Thanks, Omar. That's all the questions. I'll toss it over to you for closing comments.
All right, guys. I hope you guys learned a lot. Just if you guys want to comment, was that helpful? Did you learn a lot? I hope it's absolutely enlightening, because it just changed my life. Like I said, let me know what you guys got out of this. I hope you guys learned a lot, and I hope this is something that you actively pursue and learn, because it'll be a skill that you'll have for the rest of your life that nobody can take away from you, and that's a really good spot to be in. Thank you so much for joining us today, and we look forward to hearing from you guys in the near future. Take care.